Bitcoin's the fastest growing alternative investment for high net worth individuals in the world. And, you know, if you think about it from first principles, it's by far the easiest. You know, it's not easy to buy buildings or buy, you know, Paul McCartney's music rights or buy natural gas pipelines. But you can buy $20 of Bitcoin, 200, 2,000, 20 million, 200 million, 2 billion, 20 billion. And it doesn't matter how much you buy. You have the same exact property rights, the same exact asset as everybody else. This is very compelling. I say to people sometimes, you're trying to figure out what to buy to give to your kids or grandkids. Buy something that passes the Bernard Arnault test. Buy something that a person richer than you, more cultured than you, will want to buy from you in a decade, right? If the billionaires want it now, they're going to want your Bitcoin in a decade. If they want your Bitcoin in a decade, then the price is going up. It's not going down. You'll always find a willing market for it. 70 public companies right now are capitalizing on Bitcoin. In August of 2020, that number was 0, and MicroStrategy was the first. And since then, we're starting to see a viral effect. This is an economic dynamic spreading virally around the world. Why? Because public companies can issue millions or billions of dollars of securities every week, and they can do it again, over and over again. So once a public company capitalizes on Bitcoin, they don't just buy 10 million a year or 10 million a week. We went to the market and we raised $1 billion in a convertible bond 1 week. It worked out well. The next week we did it again. The next quarter we did it again. The next quarter we did it again. Last quarter we started to raise $1.5 billion, and then we decided to make it 2, and then we decided at the end of the day to make it 3. So when you're playing with public company money, the amount of capital here is orders of magnitude more than you would see with private corporations. And as each one of these flip, they go from, if the miners flip, they go from selling Bitcoin to buying it. And another example, Mara up there, they went and did a convertible bond offering 1 week for something like $800 million. They came back the next week and did another 600. I think they did $1 billion the first week and then like $800 million the next week. And so these are very, very powerful actors in this space. And every major market, this is spreading. Here's a snapshot of Bitcoin ETFs versus the commodity ETFs. What you can see, like we're looking at silver and gold and Bitcoin. So Bitcoin's the winner. Gold is the second best commodity. There really isn't a third, right? The rest are just trading vehicles. You're not going to actually hold any other commodity for any material period of time. So Bitcoin is generally just eating all the commodity ETFs. This is Bitcoin against the bond ETFs. What you can see here is, you know, all the bonds are kind of slow, sleepy money, and Bitcoin is blowing past all of them, right? Do you want 4% return a year, or do you want 99%? There used to be a 60-40 bond portfolio, you know, 60% equity, 40% bond. Now Bitcoin's creeping in to be 1 to 3% of those portfolios. It'll move to 5 to 10% of those portfolios. As it does, the price of Bitcoin is going to skyrocket. This is all these are the largest ETFs in the world. And so it's ranked from the number 1 in assets, the SPY, all the way down. You see where IBIT is on this chart, you know, from nothing crawled up on the board. But what you can also see is that with the performance of IBIT, it's pulling, and Bitcoin, they're pulling so much capital. They're going to slurp the capital out of all the other ETFs. And I don't think it's unreasonable to forecast that IBIT may very well grow to be the biggest ETF in the world within 10 years at the rate it's going right now. And the bad news for you is Bitcoin is beating your favorite hedge fund. These are the best hedge funds. You know, we can find 4 hedge funds that could outperform the S&P in 2024. Most hedge funds underperform the S&P in 2024. But Bitcoin, of course, is crushing all of them. And the joke, of course, is, the bartender, the Uber driver, the aircraft mechanic, they're all buying Bitcoin, right? And they're totally crushing all of the masters of the universe with their PhDs in finance and all of their computers and their 18 screens and all their high-frequency trading, right? And it's a reckoning. Bitcoin is the new benchmark. What is it? Well, you have to go back to first principles to figure out what is Bitcoin. This is the great quote at MIT, where I studied physics and thermodynamics and engineering. And everybody in the world knows Satoshi discovered a method to transfer value without a trusted intermediary. That's been repeated ad infinitum. It's repeated ad infinitum brainlessly by people that love Bitcoin, by people that hate Bitcoin, by people that want to criticize it. Right, this is the thing. But they don't really think hard about what that means. Because if you can come up with a way to send value between two individuals without a trusted intermediary, you've come up with a way to store value without a trusted intermediary. So the profound idea is not, I can send $1 billion from me to you without a bank in the middle. The profound idea is I can put $1 billion in cyberspace for all of eternity without a bank in the middle. That is to say, we put money in orbit. The difference between putting something in orbit and then putting it in a ballistic trajectory is the ballistic trajectory comes back to Earth. The thing in orbit orbits for 1 billion years. You put it up into a fast enough escape trajectory, maybe it orbits the solar system or the sun, maybe it escapes the solar system. Putting something in orbit is profound. Putting money in cyberspace, storing value in a network that doesn't rely on a government, a company, a computer, a counterparty, that's the profound idea. Bitcoin, Satoshi discovered something which is profound. It's digital energy. It's the conservation of energy in cyberspace. It's the first digital thing that you can't copy. You can copy everything else. It represents the transformation of capital, our capital, from finance and physical assets to digital. It is the digital transformation of everything that we think is valuable in this world. And here's a chart of it. Global wealth, $900 trillion. People own things they think are valuable, bonds and currencies and equities and real estate and art and gold. But if you look at that chart and you think about it a bit, you realize that half of those assets are held for the utility value. When you have a car or a plane because you want to fly in it or drive it, it's useful. When you have a building because you need to work in it or manufacture in it, it's useful. But when you just buy something because you need to park your money there, it's long-term capital, it's store of value. It's the rich dude that has 10 houses but lives in one, right? They're just land banking, right? When you buy the bar of gold, it's the rich family that has 87 Picassos in a vault under a mountain in Switzerland. They didn't buy them to look at them. They're just parking their money there. So I'm going to call that long-term capital. That's half of everything, right? When you're a company with bonds on the balance sheet, you're just parking your capital there, right? And so you can see with currencies, with bonds, it's pretty obvious. But a lot of people buy real estate and a lot of people buy stocks because they just have to buy something. They're just putting their money there. Now here's the problem. That $450 trillion parked in financial assets and physical assets is struggling against entropy, against chaos, against inflation, against competition, against the passage of time, right? You had a bunch of land in Pacific Palisades, right? Fire hits. It's not worth as much. You had something on the Gulf Coast of Florida, a hurricane hits you. right? You had a bunch of buildings in downtown Kiev, or maybe you're invested in the best of Siberian real estate, or maybe, maybe you had ships and they got caught in a storm and one of them sunk, right? How does your capital get destroyed? It gets destroyed by war and taxation and expropriation, and you have $10 million house in Miami and then the state of Florida hits you for 2% of it every single year. $200,000 tax bill, right? If you actually took all your money and you just bought a nice property in Miami, your money would be gone in 15 years, right? Your capital is being destroyed all the time. How big a problem is this to the world? It's a $10 trillion problem. Okay, $450 trillion decaying at 3% a year. It's $13 trillion, right? It's a lot of money. And it is the gradual but progressive and certain decay of your capital assets because you have them in short-lived storage containers. Bitcoin is an asset without the financial risk of your currency, your stock, or your bond, and it doesn't have the physical risk of the real estate or your Picasso or whatever concrete thing that you want to hold. And so now when you come back and look at that long-term capital and you think about smart people, you say, well, I'm a smart person, I'm a Russian, I have a bunch of real estate in Siberia. Oops, maybe I'll buy some Bitcoin. I'm a Chinese, wealthy person, but I want to leave China at some point. I can only take $50,000 of cash with me. Maybe I'll buy some Bitcoin. I've got a bunch of warehouses. They're rusting in South America. Maybe I'll buy some Bitcoin. I'm worried about the government toppling in my local African country. I'll buy some Bitcoin. I just buy some Bitcoin. I believe in tech. I buy Bitcoin. Bitcoin is transforming and it's slurping out that long-term capital. So people go, well, what happens if it stops going up? It's like, well, what happens if water stops flowing downhill? What happens if time goes backwards, right? What happens if the law of thermodynamics no longer holds? What happens when people decide they want less secure things rather than more secure things? What happens when they want crappy stuff instead of good stuff? Right? It's not going to happen. Right? There's a natural progression here, which is intelligent people are moving their money from a more disordered state to a less disordered state, from a shorter life expectancy container to a longer life expectancy container. They're moving from an unsafe place to a safer place. And that is the digital transformation of capital. The greatest transformation in the 21st century is not digital photos, it's not digital books, it's not digital newspapers, it's not digital storefronts or digital menus or digital audio. Not that those aren't cool things, you can make $1 trillion company on them. But the greatest transformation of the 21st century is the transformation of capital, right? Bitcoin is digital capital. That's the profound idea.